Welcome to Market School. You can visit us at marketschool.farms.com. This video being sponsored to you by DeKalb Brand Seed and to educate producers across Canada to do a better job of that grain commodity marketing. This is our 23rd video series, and today we're going to be looking at the process of developing a marketing plan. We're going to look at the components, the different steps to manage that risk and implement that marketing plan. In our first step, we have to determine that objective. We've got to be precise about the objective. We're going to determine the trading or execution rules. That follows who's going to be responsible for the execution of those rules. We're going to determine how the plan will be reviewed, and then we're going to briefly look at the role of the financier, the banker, and futures and options brokers. Every day there's a lot of risk, from production to marketing. We have to make decisions whether we decide to pull the trigger or whether we stay on for higher prices. So in the past, producers have had about 3 to 4 ways to manage that risk. And we've talked about all these in past video series. So if you need to get up to speed with some of these different ways of managing a risk, please go to that Market School at farms.com, and you can also review the fixed forward contract, minimum maximum price forward contract, hedge with futures, hedge with options. So let's have a look at those steps. The first step really is to be precise about the problem to be solved. What's your objective? You have to determine that objective. You got to determine the trading or execution rules. And one of them could be a fixed forward contract. Identify who's going to be responsible for execution. Maybe it's you, maybe it's a family member, maybe it's someone else. Determine how the plan will be reviewed, and then establish the role of the financier, provider, and broker. So let's have a look at the first one. Be precise about the problem. The producer needs to know why risk management is important. Maybe it's to protect the farm from being highly levered. Maybe it's to maximize profits. Maybe it's to ensure profitability above your cost of production. The second step is to determine the objective. The objective should be precise and written. Precision means being able to measure whether or not the objective was met or achieved. Most people who are not precise measure their performance by futures and options, and that makes them speculators. Throughout this whole series, we've stayed away from being a speculator. Remember, you're long a commodity and you need to be a hedger, not a speculator. In step number 3, you determine trading and execution rules. A trading rule follows that objective. The objective is to lock in a specific price, and the trading rule is to either forward book when the price objective is met, sell the product when the price objective is met, or you sell futures when the price expectation is met. If the objective is to maximize price, then the trading rule will likely be based on technical analysis. That's another 3-part video series we did in the past. And again, go to marketschool.farms.com to look at all the technical analysis that we did for you. If the objective is to protect against the price falling below a certain level, then the trading rule will be to sell at the price or to buy put options to protect that minimum price. Again, go back to futures, options, and technical analysis to review all of that information. Step number 4, identify who is responsible for execution. Some operations have hedging committees. Experience shows that a decision by a committee results in lack of discipline. Hedging committees should develop the plan and appoint one person to implement it. So it's either yourself, maybe a family member. We find that those who have passion for marketing do a lot better than those who do not. Most farmers have passion for production. I would not want to take this risk, by the way, but hey, to each his own. Number 5, determine how the plan will be reviewed. Experience shows that plans change as the market changes. For example, prices are substantially higher, and decisions need to be made about what portion of the crop to sell. Strict guidelines should be set about when the plan will be reviewed. Too frequently loses discipline. Too seldom can lead to lost opportunities. Again, we've talked about this in past video series. Depends on the year, depends on where prices are. Right now, prices are historically very, very high. Very unusual to have record highs through the month of August. So you constantly have to review that plan, probably a little bit more often than you would when prices are at extreme lows. Again, I wouldn't want to be this guy here taking that risk, but hey, probably loves what he does. Step number 6, the role of finance provider and brokers. These people become very important in the implementation of the plan, particularly if you're a farmer that has a lot of debt or leverage. Explain to the bank why you need the financing. Maybe it is to buy some futures or sell some futures or buy some put options to protect a minimum price. If you go to them and say, hey, I'm speculating or I'm taking some risk, you're not going to get the funds. However, if you communicate that, hey, I'm managing a risk, showing them that, in the past you've managed a risk through a marketing plan, then that's a different story. They'll probably most likely lend you the money. We'll discuss the role of the broker and how to deal with a broker in our last video series. So in summary, having a risk management marketing plan is very important to help you manage through that risk and volatility. Execution of the plan is even more important. Know the steps and stay disciplined. Marketing is more of an art than a science. There is no exact science to marketing, but it can be easy. Stay focused, use less emotion, and you will to become a successful marketer. In our next video series, we're going to continue with the risk management or marketing plan and use examples by comparing Farm A to Farm B. Until next time, thanks for watching. We hope that we provided you with some insight and some understanding on our topic, developing a risk management or marketing plan. Thanks for watching. Have a great day. Take care.